Welcome back to another edition of Special Situations Investing with Greg. This is the first video of 2022, and as such, I want to do some reflection on my experience in 2021. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. All right, at the end of every year, I like to do some self-reflection and some perspectives on how things went in my investing, in my life, in all sorts of different aspects of my life. But for investing, I think it's important that sometimes you look back at a year and you kind of look at the lessons that you've learned. I've done the same thing in a bunch of other areas of my life, but because this video is on investing, I thought that I would spend some time talking about some lessons that I learned over the past year. These lessons are not in any particular order. If I wanted to rank them, I'd probably say that the one on patience is probably the most important, but there are some other ones that are definitely timeless and things that you need to have and learn from. So check it out. Lesson 1. The first lesson that I got from this past year is that I need to continue to participate in tender offers when I have a small portfolio. This portion of the portfolio should be no more than about 10 to 25% of my total overall portfolio in my view. And so I'm continuing to have cash available for tender offer participation, and the goal is to always have about 25% ready, but then when there's opportunities that are longer term, some of that 25% can then be deployed into those other positions. The overall cash returns for these are not crazy, but the loss probability versus the cash return I think is relatively good, and it's a good way to have like a cash account that allows you to continue to develop and create long-term or cash for long-term investments over time. Lesson number 2. Read or reread articles and books recommended or authored by the investors that you want to participate or to follow. So rereading the investors that we have, I spent some time rereading The Intelligent Investor, Joel Greenblatt's book, You Can Be a Stock Market Genius, Murray Schiller's books on special situations. All of those books, and spending my time rereading them has definitely been good for me to learn from and to re-hone my efforts. And I expect to do that again this year because I think that it's super valuable in preparing myself to get in the right mindset for the investing practice that I have. One note, I know that when I've read a lot about something, I end up dreaming about it, and I've read enough or watched enough videos about Warren Buffett over the past year that recently I've had a bunch of different dreams where I've dreamt about Warren Buffett and having an interview with him and me asking him how my strategy is working out and him giving his advice. So it's really weird to have that happen. You know, sometimes you have weird dreams. You know, that was a weird dream of mine this past year. Lesson number 3, looking for longer term opportunities in my special situations and exposures. So Shift is one of the investments that I think is a longer term opportunity, as well as Garrett Motion and then also Prog Holdings. And all three of those companies have these longer term opportunities that I think will pan out over the next 3 to 5 years that I think is definitely worth holding some of that powder in reserve from the tender offer participation, so that you can get into a company like that and then hold it for a longer period of time. I definitely see those as that is one of the best ways to preserve capital over the long term, but also give your portfolio some upside potential. And I see that as a great opportunity for longer term gains and not the active management of an entire portfolio. Number 4, use options or other devices in order to pull cash out of transactions over time. I had the experience with Box this last year. You guys could definitely take a look at it. But as I was doing collars on Box, I was able to pull cash out, get about a 25% return out of that company over the past year, and preserve my capital for follow-on investments. And I thought that was a good potential way to go. I don't know if I would do it every single time. I think I'd be more prone or more apt to go ahead and use collars to pull money out of a company if I have a significant number of shares in it. And if I don't have a bunch of shares, and an options contract would basically represent almost half of my position, I don't know if I will be interested in putting more into those or using collars as much on those. But who knows? Maybe I'll change my mind. If the company gets to the position or the price that I think that it should be, reducing my exposure from that position by using collars, I think, is a great way to go. Number 5, learn to turn off market emotions or market-based emotions when a company's share price tanks. So those of you that have watched me for a while, you know that I've put money into Shift, and I see that Shift has just dive bombed. They've got almost 25% of the company is being shorted right now, and it's getting beat up quite a bit. And I think that's a crazy percentage, but I think that there's a lot of opportunity there, and I'm trying to make sure I maintain a level-headed position on this, and focusing on the operating results from the past year makes me see that Shift actually has opportunity and long-term potential, because its operations are improving, and that's when its share price is tanking. And I think that there's a great opportunity in this particular position going forward. And so, in full disclosure, I went ahead and added more to that in the position of calls, long-term expiring options on Shift shares. So that's a little bit sketchy of an area, and I'll talk a little bit more about that. But when a share price goes down, if you really truly trust the company and you like the business that they're in, you have to be in a position where you, 1, have the cash to purchase more shares, and 2, have the mental capacity to be willing to purchase more shares. And yeah, this is one of those moments where I think I'm going to do well over time, but I also need to make sure that my mental state is in a position where I can accept the short-term drops in share price. Closely related is my next lesson, and that is to practice patience. I think probably one of the best skills that an investor in special situations, or any type of investor, should have is to be patient and know that yes, today might be a tough day, there might be some difficult things that are going on, but if you are patient through those trials, then the sun will rise on the next day. And that is the opportunity that you need to be looking for, and be willing to accept that sometimes you're going to make mistakes. Be patient with yourself. Sometimes your investments will go bad. Be patient with how your returns go sometimes. And then be patient with the fact that sometimes there are things outside of your purview or outside of your control that are just not going to be things that you can fix. So with that in mind, learn to practice patience as you invest. Number 7, capital preservation is more important than the potential overall returns. I think a lot about the investing experience that I've had over time, and I've had a lot of successes and then a lot of failures. And the more that I have the successes and failures, the more that I learned that I get better over time focused on those two different things. Because I recognize the mistakes, or I attempt to recognize the mistakes, and then I focus on what is it that my successes were successful for. I'm glad that I don't have all successes, because then I would have this understanding or this unrealistic view that investments always go up and to the right, and I don't think that that is an appropriate way to look at the investing world. You need to understand that there are some times when you're going to make money and sometimes when you're going to lose money, and you need to understand why. And if we can dig into the reason why over and over again, that's going to make us a better investor over time. And so I'd probably put that one at the number 2 slot if we were going to order these, because you need to always look back at your capital preservation, because if you don't have capital preserved, you're not going to be able to play in the game in the future. Number 8. The 8th lesson, the last lesson, is that bias is real. And I've had some interesting experiences this last year with bias and my own. I'd like to just share some of this. And what has happened is I go ahead and I do some research on investments in the companies that I'm looking at, and then I dig into their 10Ks, I dig into their 10Qs, I dig into the different forms that we have from the SEC that's, already biased because it's the CEO or somebody else that works for the company that's trying to demonstrate that, hey, you should put money behind us. And then I take that and then I create my own thesis, which further confirms that whether I believe it or don't believe what's being talked about, and then I go ahead and I post my commentary online for those of you that watch this channel. And I've thought a lot about, what kind of risk am I taking by posting about investments that I am putting money in and sharing that with the world. Already I'm putting money in, that causes an additional layer of bias, and then I share it with the world, that causes an additional layer of bias. I can see multiple layers of confirmation bias coming through when I do this, and it's actually caused me to question whether or not I should spend my time making the videos, because I don't want to make myself so biased that I make mistakes. I think that this is a huge risk. It's probably one of the bigger risks that I deal with as an investor. It is part of the reason why I share my thoughts and I don't call it due diligence. And the reason is because I don't consider it due diligence when it is as biased and it has as many opportunities for bias as I have when I share it with you guys. I'm sharing this so that you guys can understand it, and I don't plan on stopping my videos anytime soon. I think that there is value in creating a video channel on special situations investing. I want to create a resource that people can use to invest in their own special situations and improve their own special investing. So like any investing mutant would probably be drawn to something like this sometime in their lives. And I want to make sure that there is a resource out there, because I didn't have one. And I mean, Maurice Schiller's books were only reprinted a couple of years ago, and they weren't around when I was younger, and I wanted to learn more about this type of investing. So there's a lot of opportunity out there. The bias is real, and recognizing that bias is real, I think, is probably lesson number 1 when you are trying to avoid making mistakes. Anyway, guys, I hope that you find those lessons useful. If you have a lesson that you think that I missed that should be included, maybe a lesson that I shared in one of my previous videos, or maybe a lesson that you personally learned over the past year in your investing practice, please go ahead and share it in the comments below. I would be more than interested in seeing what things you guys are paying attention to. With the new year, I would like to just do a quick little share of where my portfolio position is right now. I have approximately 42% of my portfolio in my three largest holdings, and my three largest holdings are as follows: Garrett Motion and Garrett Motion preferred shares, and then Garrett long-term expiring options back into the 2020 end of 2023 for those in December of 2023. And then I have Shift shares and Shift long-term expiring options for 2024 with a strike price at $250 a share. And then my third position is Progressive, and between those three companies, like I said, I have 42% of my total outstanding portfolio, and then I have 8% of my portfolio in cash at this time. I expect to increase that because it's the beginning of the new year, and some of these are tax-free or tax sheltered accounts, and so I will be adding to those to be preparing for the next year. But those are my three largest holdings coming in, and I think that this next year will turn out to be a very interesting year for all of those three companies. Anyway, I appreciate your watching me, and we will catch you next week. Thanks a bunch.